So friend, question comes, can a person claim ITC of an invoice that is not being reflected in 2B? I mentioned you. If invoice is not available in 2B as per section 16, you cannot avail your ITC. So means for every invoice, it should be depicted in 2B, and if it is not there, you have to follow your supplier that why it is not appearing in 2B. So here is the difference between 2A and 2B, as I was mentioning to you. 2A can be for previous period also. It can contain the information for whole year, but 2B is for particular month. So 2B is available to us after 14th of the next month, and ITC more or less depend on 2B. But if your supplier has missed filing your some of the invoices during current month and which is not appearing in 2B by chance, then it will appear in 2A when he will file his next month return. So 2A carry all information, all invoices including missed out invoices, whereas 2B will be having invoices for that particular month if has been filed or data is uploaded in GSTR 1 by the supplier. So again friends, question comes, can a person claim ITC against a bill which was reflected in 2A 2B of previous month but ITC was not availed or claimed? So question is, if any person have purchased something from another person and the supplier has filed its GSTR 1 and that amount is appearing in GSTR 2B or 2A, so it means ITC is available to this particular buyer, but he has to claim it. So what is mechanism of claiming? Because if any item is there in 2A or 2B, it is evidence that this person, this man has purchased this item and he is supposed to be having its bill and possession of goods and services, whatever he has done. But after that, this man, the buyer, have to claim that amount of ITC in his own return. So how he will do that? He will claim that amount in his 3B. He will claim his amount in his 3B. So question is, can a person claim ITC against a bill which was reflected in 2A or 2B of previous month, but ITC was not availed or claimed? Answer is yes. A person can claim ITC afterwards also, but before 30th of November of the next year. What does it mean? It means if in the month of February I have purchased something from a supplier, he has filed his GSTR 1, and that after filing its GSTR 1, the amount or the bill raised to me is there in 2A or 2B. And when I am filing my return of GSTR 3B for the month of February, I forget to have this bill into account. So in the month of February return, I ignored by chance this particular bill and I have not claimed its ITC. So solution is, by 30th November of next year, means if I am talking about 23-24 financial year, so 30th November 2024, in any of the returns, I can claim this amount. In any of the returns, I can claim this amount. But after 30th of November, if still I have not claimed this amount, then it is foregone. Then it is not available to me for ITC. So 30th November is the date when I can claim my all ITC which I forgot by chance for the financial year 23-24. Similarly, for the next financial year, if I have forgot to claim any ITC in my 3B, I can claim by 30th of next year. So one has to be clear in their mind that I should not forget to claim my ITC in 3B. So once again I will explain you to clear your doubt. If supplier has supplied goods to me, I have purchased goods, I have received the goods, I have received the bills also. When he will file his GSTR 1 as a supplier, that invoice will appear to me in my 2A or 2B, and based upon that 2A, 2B and the invoice I have, physical copy I have and the goods physically I have, I will put this ITC amount in my 3B when I will file my 3B, that is my tax liability statement or the return, which I file every month after GSTR 1. So when I have put this amount in 3B, it means I have claimed that amount. And if some other reason I forget to claim this amount in 3B, I have a time up to 30th November of next year. So for financial year 24-25, I can claim any such invoice which I have not claimed in my 3B up by 30th November of 2025. For 23-24, I have a time up to 30th of November of 2024. So during this period, in any of my returns, I can put this claim and it will be available to me. Now coming to GSTR 3B. It is my tax return. My liability has been fixed by GSTR 1 and now I have to pay tax. So this return, GSTR 1, give you the amount of tax you are supposed to pay to the government based upon your sale, and you have declared your sale in GSTR 1. And based upon 2A or 2B, your ITC is also clear now. So after having proper calculation of 2A, 2B and physical copy of the bills you received, the goods you have received, you will make your calculations, and in GSTR 3B, in a given column, you will mention about your ITC. And it is a system of segregation of ITC into three parts. One is ITC available on your inputs, that is your raw material, your expenses, and then ITC available against your capital goods. If you have purchased any plant and machinery, then that has to be segregated separately. And inputs on your services, your input services of engineer, services of advocate, services of architect, whatever it is, engineer services, etc., etc. So total ITC available to you in 2B or 2A will be segregated into three parts under GST 3B. There are different columns available there in 3B. You are supposed to declare there your ITC. Here you will declare your total ITC, and after that you will reduce from this ITC your ineligible ITC in the same fashion, in the same manner, and then work out your net ITC available for different taxes. Means ITC available or eligible ITC for IGST, eligible ITC for CGST, eligible ITC for SGST. And also you will declare over here your output liability in form of IGST, in form of CGST, in form of SGST on your sales, what you have declared in your GSTR 1 return. So GSTR 1 is supposed to be filed by 11th of the month, next month, and GSTR 3B is supposed to be filed by 20th of the next month. So if we are talking about July, so July return of GSTR 1 date is 11th of August, and for 3B date is 20th of August. So it's a monthly return again. which calculate your tax liability, which calculate your ITC available, which talk about your cash payment of taxes. So this is a summary basically. Outward supplies, their inward supplies, ITC availed, tax paid or payable. So by filing GST 3B, you will clear your all taxes for that particular month. So if we talk about July, so when July return will be filed on 20th of August, it means whatever business you have done in July, whatever tax liability has been calculated based on the based on the sale you have declared in GST 1, now you have paid your taxes to the government after adjusting all ITC. And also, if there is any service obtained by you under reverse charge mechanism, because in reverse charge mechanism you are the recipient, so reverse charge means recipient has to pay taxes. So if during July, if you received a bill from advocate of 1 lakh rupees, there is a liability of 18,000 rupees of GST to be paid in GST 3B. So there is a column in 3B about this transaction also, means all transactions covered under RCM. So in 3B, you will declare your outward supply liability, your RCM liability, your any fine, any penalty, any late fee or any interest. So any type of liability, if have been intimated by department or it is because of law, you are supposed to pay in 3B only. And ITC settlement or ITC benefit is available only for the payment of taxes. RCM you cannot pay from your ITC. Fine, penalty, late fee you cannot pay from your ITC. For that you have to deposit cash by generating challan through NEFT, RTGS, like that. So whatever ITC is available to you, that can be used for the payment of IGST tax, CGST tax, SGST tax. But it cannot be used for payment of RCM. It cannot be used for payment of fine, penalty, late fee. And for that you have to pay cash only. And that too in GST 3B. So when we are preparing our GST 3B or we are calculating our GST 3B, or for the sake of filing of GST 3B, the calculations are made by referring your GST 1, it is your sale, inward supplies to you, which are auto-populated in 2A, 2B for your procurement, ITC availed auto-populated in 2B, and any tax liability to be paid in cash ledger. So summarizing all these things, we will file our 3B to close that particular tax period. And if there is anything remains there outstanding, that can be taken care of in next month GST 3B. So friends, when we are filing 3B, a registered person having turnover more than 20 lakh rupees or 40 lakh rupees, 3B has to be filed on monthly basis. It is a monthly statement, monthly summary, monthly return we have to file. A registered person with turnover 20 lakh rupees having opted for quarterly return, this is the option given to the businessman if he wants to file quarterly return also. So for filing of returns means we have mainly two main returns under GST, that is GST 1 and GSTR 3B. These are our monthly returns. But to facilitate the trade and industry, to give a facility or give a ease of doing business to the trade, government has given another option of QRMP for small traders. For small traders, they have option of QRM. QRM means you file your GSTR 1 and 3B quarterly also you can file, but pay taxes monthly. Quarterly return, monthly payment. Quarterly return, monthly payment. So you can file your GSTR 1, GSTR 3B quarterly basis, but have to pay taxes monthly basis. So government will get taxes every month if you are opting for this scheme. Otherwise, as a regular dealer, you are supposed to file your GST 1, GST 3B on monthly basis. Now, GSTR 4, another return under GST by composite taxable person. He will also file CMP 08. So this composite dealer or a person having turnover up to 1.5 crore has option to go for this scheme where he will not charge tax in his invoice. I mentioned earlier. He will calculate tax on total turnover and pay to the government as per the rate applicable. But he will file on quarterly basis and pay tax quarterly basis. This is for small traders having turnover less than 1.5 crore. This return cannot be revised. Whatever you want to do, it will be during assessment by the department. So for composition dealer means those are having small businesses up to turnover of 1.5 crore if dealing in goods or 50 lakhs in case of services. So if they are having goods or a manufacturer, he will pay 1% tax on his total turnover. So if any composite dealer having turnover less than 1.5 crore is a manufacturer, he will not charge any tax in his invoice to his customer. But whatever turnover will be there during that particular month or a quarter, he will calculate 1% tax on that turnover and pay to the government. And if it is in service, like restaurant service or so, he will charge 5% of the turnover. And if he is service provider, he will charge 6% tax. He will charge 6% tax. So these are different type of categories for different type of business people. So we have to understand nature of the business and the applicable provisions under GST. We cannot say that common rules or the same rules are applicable to every business model. Here also it is mentioned for manufacture of bricks, provisions are different. Though they are eligible for this composition scheme, they are not the regular dealer. Then GSTR 5, I mentioned earlier also. It's a return form for non-resident foreign tax person. A person sitting in USA, a person sitting in Australia, a person sitting in China, selling goods to Indian buyer, maybe through e-commerce operator, maybe through some representative in India. So when consumption is India, tax will be levied on imported goods. And the person authorized by this fellow who is sitting in China or America or UK through his authorized representative in India, they will file their monthly returns and pay taxes to the government. So there is set format there, GSTR 5, asking for various returns, various type of information in that return, and you are supposed to file this return by 20th of next month. GSTR 6 for input service distributor. I explained you this in my earlier slides, that any company having centralized procurement, bills are coming to them in head office and they are sending goods to units directly, and GST is a consumption based tax. So finally this ISD has to raise invoices to their units so that tax can be transferred to respective states where goods are consumed. So they file their GSTR 6 mentioning there what type of and how many values of goods they have purchased and for how many goods they have raised the invoices, and if there is any difference, what are the reasons for that. And they have to file their monthly return 13th of next month. Based upon their return, whatever invoices they will raise to their units, it will appear for their units in their 2 or 2B for credit purposes, for ITC purposes. If they will not upload the invoices on GST portal, their units will not get ITC. So they have to make it sure that they file returns on regular basis. So GSTR 7 to be filed by government agencies, those are deducting TDS. Because I told you that TDS will be a benefit available to the person from whose payment the TDS is deducted, and they will claim it in their cash ledger. So unless these parties, those have deducted TDS or TCS, file their monthly returns, the amount deducted by these parties will not appear at GST portal in cash ledger of the suppliers. So it is mandatory for them to file their return by 10th of next month so that it appears to the suppliers or their statement at appropriate time. So when they start calculating their tax liability in 3B by 20th of next month, they will consider this amount also while calculating their tax liability. So it is important for such people to file their GSTR 7 well in time, without failure, without ignoring any invoice or tax deducted by them. Otherwise it will be a loss for the supplier, because he will not be in a position to claim this amount or consider this amount while calculating his own tax liability. Similarly friends, GSTR 8 is again a monthly return to be filed by a person who has collected tax at source and deposited to the government. So its date is also 10th because TDS and TCS are having similar provisions. So once this buyer has deducted TCS or collected TCS, he is supposed to deposit it to the government and file its return in GSTR 8, giving details of all such deductions, so that the amount deducted and deposited by this fellow is available to the buyer for calculating his own tax liability. So these returns are equally important from buyer's point of view. So friends, as I told you that if you are having a GST number, you are supposed to comply with each and every provision of law without failure. So GST says if you don't have any sale during the month, is return filing is compulsory? Answer is yes. If person does not have any sale or purchase, even then he has to file nil return without failure. If he will not file, I told you, if he will not file return, his next return will be stopped. he will not be able to file next month's return. So nil rate of return is must. Only then he will be able to file August month return if we are filing, or if we have not filed July month return.